Let's look at what we're seeing in commodities now. Oil prices easing. Data showed an increase in US diesel stockpiles, stoking concerns about demand despite the Fed cutting rates. Brent crude holding around $68 a barrel. Copper was down overnight. Iron ore marginally lower at $106 a tonne. And gold, yet again, a fresh record high after the Fed's decision, a new peak above 3,700. However, subsequently unwound those gains to be around 36.60. Let's get more on the commodity outlook in light of the Fed's cut with Brian W. Beechew from the Australian Gold Fund, who joins me now. And this rally in gold, Brian, just really quite extraordinary here.
Move. It's like, firstly, you had gold break above $3,000 for the first time, US dollars in February, then over $3,500 beginning of this month, and we broke above 3,600 this week, and we were almost there to hit 3,700. Even as a gold bull myself, I'm quite overwhelmed by the speed in which all of this is happening, and it's all because of the market's expectation of the rate cuts. And historically, if you look at the rate cuts in the past cycles, it always leads to a bull market for gold. And in our case, of course, the price of gold started rising shortly after inflation peaked in 1,600 US dollars an ounce. And from 2023 on, it traded sideways. It broke above 2,000 US dollars an ounce, but it couldn't actually smash through the resistance level of 2,080 US dollars that was set in 2020 until the Federal Reserve last March announced that they would commit to cutting interest rates 3 times. And then that's when we saw gold started taking off. So it has been really phenomenal, but at the same time, I'm also mindful of what the market's behavior is to the messaging from the Federal Reserve, and also in general from economists and other financial institutions.
Yeah, absolutely. And you say as well, when we're looking at this run-up in gold, Brian, that there are some parabolic moves in some of the explorers and developers as well. What are you watching?
Okay, so we have seen a couple of companies that have gone parabolic, and those are the ones which I would probably say you got to be very careful about chasing because they have taken off. So we have seen Dateline Resources, Kalgoorlie Gold, Southern Cross Gold Consolidator, Black Cat Syndicate. Those companies have done extremely well in the past 18 months or so. Those are probably the companies where if I recommended it to my newsletter readers or I hold it myself in my portfolio, we are actually taking profits at the moment. We are looking at other companies in this space, the below $150 million market cap. There are several companies which I believe have significant potential to potentially rally as the market catches on to this gold fever.
All right, gold fever indeed. So you say there as well, in terms of some of the parabolic moves, potentially watch out. But when the large gold producers are moving here, is there a worry to sort of reduce some exposure from them as well, or do you sort of hold on here?
That's a good point, Juliette, and I thought it would be worthwhile to mention a few things to put into context why I believe the parabolic moves in the large gold producers requires a bit of caution. So 3 years ago today, gold was near its all-time, well, not all-time lows, its cyclical lows since the pandemic, and gold was trading at about 1,600 US dollars an ounce. At that time, companies, the largest gold producer on the ASX, Newcrest Mining, I think it was about $15 billion. Northern Star was about $10 billion. Evolution Mining was trading surprisingly at as low as $3.5 billion. Now, Newcrest produced about 2.3 million ounces of gold a year, Northern Star about 1.5 million ounces of gold, and Evolution Mining at that time in 2022 produced about 640,000 ounces. Today, we have mid-tier producers such as Genesis Minerals, Ramelius Resources, Capricorn Metals. Their market cap is over $5 billion. So their production is no more than 1/3 of what Evolution Mining is producing. Well, I should correct myself because Ramelius Resources produced 300,000 ounces for the 2025 financial year, and they also had merged Spartan Resources into the company, hence their high market cap. But at the same time, you look at junior producers, for example, Pantoro Gold, Catalyst Metals, or Abanda Mining. These companies are producing about 100,000 ounces of gold a year to 120,000, and the market cap's $2 billion or around that. So the last time I've seen companies trade at that level was in 2011. And we could remember in 2011, gold was heading towards $2,000 an ounce. And of course, we had Ben Bernanke from the Federal Reserve decide to put in Operation Twist and therefore turn the real yield around, and therefore gold fell from $1,921 an ounce to $1,045 an ounce by around November 2015. Now, I'm not saying that the Federal Reserve has any tricks up their sleeve at the moment to raise the real yield to push gold down, but I just want to emphasize that these the leading gold producers, the market has definitely piled onto them. And while there will be many who are tempted to continue to chase this, we have been trimming down our exposure since, I would say, since October last year. We've just been quietly reducing our exposure. I would say for some of these companies, we're holding about 1/4 to 1/3 of our original exposure compared to, say, 2-3 years ago.
Yeah, right. All right, Brian, I'm going to leave it there, unfortunately. I love chatting to you. Thanks so much, Brian W. Beechew.
Thanks, Juliette.
From the Australian Gold Fund.
Thank you for watching my interview with AusBiz. To learn more about our work, visit the Australian Gold Fund website. Also, check out Gold Hub Australia for live precious metals price quotes and insights. You can also sign up for our regular updates. And don't forget to visit the AusBiz website. All our links are in the description. Please leave your comments and thoughts on where gold, silver, and the US dollar are heading below. Thank you very much. God bless.